Hey everyone, welcome back to the channel. Today, we're diving deep at comprehensive analysis of Datavault AI Inc., ticker DVLT, a company that's been making waves in the tech and blockchain space. If you're curious about whether this stock is a hidden gem or a risky bet for your portfolio, stick around because we're breaking it all down. Financials, performance, valuation, and more. Let's get started. First off, let's set the stage. Datavault AI is a player in the data sciences and technology sector, focusing on secure Web 3.0 data management, blockchain, artificial intelligence, and data monetization. Their patented platform is all about visualizing, valuing, and securely monetizing data across industries like marketing, real estate, and even government applications. Based in the US with a tight-knit team of 63 employees, they're a smaller outfit, but with some big ambitions. I'm excited to dig into their numbers and see if their innovation translates into investment potential. Let's talk a bit more about who Datavault AI really is. Founded with a mission to revolutionize how data is handled in a decentralized world, they've positioned themselves at the intersection of AI and blockchain. Their tech isn't just about storing data, it's about turning it into a tradable asset through tokenization and advanced analytics. Led by CEO Nathaniel T. Bradley, the company has been pushing boundaries with projects like real-world asset tokenization, including their recent announcement of Coppercoin, a digital token tied to high-grade copper resources. They're also venturing into stablecoins and initiatives tied to social impact, like the Mandela dollar. It's a unique business model, but does it hold up under scrutiny? Let's find out. Now, let's get into the meat of their financials, starting with revenue. For 2025, Datavault AI reported revenue across several segments. The bulk of it comes from their licensing business, pulling in a solid $30 million. North America is their biggest market by far, contributing about $36.45 million, while Asia Pacific chips in $2.14 million, and Europe adds a smaller $495,000. Other segments like live events brought in $6.22 million, components at $2.62 million, and smaller contributions from consumer audio products and software development. It's clear they've got a diversified revenue stream, but the heavy reliance on licensing in North America could be a double-edged sword if those areas face headwinds. Growth-wise, though, their historical revenue has been a bit of a roller coaster, jumping from $2.4 million in 2020 to $6.54 million in 2021, then dipping to $267 million in 2024. Consistency is something to watch here. Moving over to earnings, the picture gets a bit murkier. For the full year 2024, Datavault reported a net income of negative $51.41 million on revenue of just $2,667 million. That translates to an EPS of negative 16.14 cents. Ouch. Their gross profit was a meager $376,000, and operating income was deep in the red at negative 21.14 million dollars. Looking back, this isn't a new trend. 2023 saw a net loss of $18.72 million, and 2022 wasn't much better with a $16.15 million loss. They're burning cash faster than they're bringing it in, which raises red flags for profitability. On the flip side, there's a lot of investment in innovation, which could pay off down the line if they hit their stride with tokenization and AI products. For now, though, the earnings story is a tough one to swallow. Let's take a closer look at what's been said about their recent performance. Following their Q4 2025 earnings release, there's been buzz around institutional investors loading up on DVLT shares, expecting revenue of $24.7 million for the quarter. That's a big jump from their 2024 full-year numbers, and if they deliver, it could signal a turning point. Management has been vocal about their push into real-world asset tokenization and new initiatives like the Josh Gibson coin and Mandela dollar, which aim to blend social impact with financial innovation. The sentiment seems to be that Datavault is playing a long game, focusing on future growth over immediate profits. It's a risky strategy, but one that could resonate with investors if they execute well. Diving into their financial statements, the balance sheet offers some mixed signals. As of 2024, Datavault has $3.33 million in cash and cash equivalents, with total current assets at $6.44 million. Total assets stand at a hefty $100.63 million, which is intriguing, but they're carrying $4.9 million in total liabilities. Their current ratio of 5.32 suggests they can cover short-term obligations comfortably, which is a plus. However, retained earnings are a staggering negative $298.45 million, reflecting years of losses piling up. On the cash flow side, they burned through $17.53 million in operating activities in 2024, with free cash flow at negative $17.66 million. They did raise $22 million through financing activities, which is keeping them afloat for now. But with a debt-to-equity ratio of just 0.6, they're not over-leveraged, so there's some breathing room. Still, these numbers scream high risk until they can turn a profit. Let's talk valuation. Right now, Datavault AI is trading at 77 per share with a market cap of about $214.61 million. Their price-to-sales ratio is sitting at 4.9, which isn't outrageous for a tech company, but their price-to-earnings ratio is negative at -1.1 due to those hefty losses. Enterprise value comes in at $173 million, which factors in their cash and debt positions. Compared to the industry average PE of 24.52 for information technology services, DVLT is either a massive bargain if they turn things around or a value trap if they don't. Looking at forward PE estimates for 2027, analysts peg it at 73.72, suggesting the market expects significant growth if they can deliver. For me, the valuation feels speculative at this stage, given the lack of profitability. All right, let's break down Datavault AI through a SWOT analysis to get a clearer picture of where they stand. Starting with strengths, their innovative tech platform is a standout. Their focus on Web 3.0, blockchain, and AI-driven data monetization puts them ahead of the curve in a growing space. Recent partnerships, like the Coppercoin initiative with Coppercore Inc., show they're not just theorizing, but executing on real-world applications. On the weaknesses side, those persistent losses are a glaring issue. Negative net income year after year, coupled with high cash burn, makes financial stability a concern. Opportunities are abundant, though. Tokenization of assets and AI-driven analytics are hot markets, and their social impact projects could attract a new wave of investors. But threats loom large. Competition in the tech and blockchain space is fierce, and regulatory hurdles around digital assets could slow their progress. Plus, their small size, only 63 employees, might limit their ability to scale quickly. It's a mixed bag, and investors need to weigh the potential against the pitfalls. Let's check out Datavault's recent stock performance. Over the past week, the stock is down 2.91%, but it's up 2.66% over the last month. Zooming out, the picture gets uglier, down 58.03% over 3 months and a painful 32.39% over the past year. However, there's a bright spot, a massive 80.8% gain over 6 months, showing some serious volatility. Over 5 years, though, they're down 56.01%, underperforming both their industry and the broader tech sector, which has seen gains of 9.91% over the same period. Looking at the chart, there's no clear trend for a short-term move. Momentum seems choppy, and I'd be cautious about jumping in without a catalyst, like strong earnings or a big partnership announcement. Now, let's try to pin down an intrinsic value for Datavault AI. Given their current lack of profitability and heavy reliance on future growth, a discounted cash flow model is tricky to apply with confidence. Their negative free cash flow of $17.66 million in 2024 and consistent operating losses make it hard to project stable future cash flows. Instead, I'm looking at their asset base and growth potential in the blockchain and AI sectors. With total assets at $100.63 million against a market cap of $214.61 million, there's a disconnect, suggesting the market is pricing in significant future upside. If I had to ballpark an intrinsic value, I'd lean toward a range of 50 to $1 per share based on their asset value and speculative growth in tokenization markets. That's below or around the current price of 77 cents, indicating the stock might be fairly valued or slightly overpriced unless they deliver on their ambitious projects. Keep in mind, this is more art than science at this stage, given their financials, so tread carefully. MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.